46 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to start off by talking about the end of QT, and this will be the primary focus, at least on the intro, and then we'll go through a normal analysis and talk about some of the events that happened around Bitcoin today. Let's get into tonight's video. Well, welcome everyone. Back 2 days in a row. That's something new, a new pattern. I'm going to continue to try to come up most of the days this week and moving into next week. We'll see if we can get some flow going again. A couple of things I wanted to talk about tonight. The first is all this chatter around the whole QT ending thing. Somehow people think that QT ending, otherwise the selling down of the balance sheet that's occurred, is automatically QE. I even saw Tom Lee. You'd think he was smarter than he looks, but he's not. He actually was talking about that all of a sudden, just because they stopped selling now, it's quantitative easing. If you went back on my videos, going back to when the Fed announced they were going to start to raise rates after the first raise, what I told you and announced the QT, I said what they're going to do is normalize the balance sheet to where they think they need to have it to support the banking system and the economy. That's what that was their target. I said it then between $6.5 and $6 trillion. Turns out 6.45 trillion is approximately where they're going to cut this thing off. The fact that they are not selling securities does not mean it's all of a sudden QE. They're not buying any securities. They actually were kind of mixing and matching the runoff on the mortgage backs that they own. I think are still being bought. So there you could argue there's a little bit of QE, but it's not material, not like what we've seen, and there's no reason to consider it to be so. In fact, I think most of this dialogue came out of the Bitcoin bros trying to figure out why Bitcoin went down. And it's pretty simple. It's the reason all markets go down, more sellers than buyers. And even though we saw self-proclaimed folks out there, telling us they bought billions and billions of Bitcoin, it was just plummeting like there was no bid. And there wasn't a bid on a relative basis. And today, of course, Strategy raised this number may not be right, $1.4 billion for a reserve account. Why do you need that? I mean, Michael told us it could go down to $1. It's very possible. We'll see if there's any disclaimers. They probably did a loan, I'm thinking, with somebody where they pledged that money and maybe had some kind of agreement that the issuer would not hold that. It may be a collateralized loan. I'm not sure what we'll find. That's me. I made that up, but it seems to be what is likely to be what's going on with Strategy. And so we got a big rally back over 91,000 bucks on the Bitcoin. So that was good. We got a nice little right shoulder set up. I'll talk through this in a little bit. But back to this Fed situation, there is no QE going on. In fact, what we're likely to see here is really another drop in yields. I talked about this a bit last night, but I think what we're going to see is the front end of the curve, we'll call it the 1 year, and the 2 years around 350 right now. So we have about 50 basis points of cushion there. I've been looking for this steepening yield curve. And in the last night's Substack, I talked about the possibility of the small caps coming into play. But excuse me one second. I talked about the small caps being a theme going forward, but that's only when the yield curve gets to about 75 basis points, where the front end of the curve and the 10-year is around 75 basis points in a steepening mode. Otherwise, the front end of the curve down. And I've been telling you for the better part of 2 years that the 10-year treasuries are not going to drop much under 4%. They printed right down to around 380 and just scream right back to, right at 4.1. That's what we just did again. We're hanging right back there. That back into that yield curve is somewhat frozen. Now we could see a little drifting with the QT off of no more selling of those back end of the yield curve. So that might allow some softness, but I still think that 380, 4.25 zone is where the long end is going to stay. And I believe the whole thing that's been going on, it's a broken record. You folks been hanging around this channel know this, that the whole situation has been going on is trying to get that steepener back into yield curve. If you study the yield curve and you're more than 30 years old and you study the yield curve, I've lived through a lot of changes here. I've lived through most of the, I see these comments from younger guys. I was a 35-year-old analyst at a firm once upon a time. That's fine. But I've lived through a lot of these situations and watched some crazy things going on. I've lived through 20% interest rates where we had the long bond at almost 17. There was an offering of 16 3/4. I believe it was in 83, and it might have been 81. It was 81 or 83. But I've been through both the complete extreme, basically 0 to 17. So when the markets are being pressed by the Fed, both times to an extreme levels, even high or low, and seeing how these things have unwound. And you can read about them in the book, but when you read about these events, you have to remember you're also getting the perspective of the writer. It's another thing when you're sitting there as a trader and bullets are coming at you. And, there was some pretty crazy times. That was Paul Volcker days, and it was pretty wild. But the point is that once you understand actually the mechanisms that are in the economy, the Fed hasn't changed. It's a 100-year institution. They're still doing the same things now that they did, 60 years ago. So there's been some changes only because they can authenticate a lot of these strategies much faster now because of the digital age. And I think going forward, we'll see even more dynamics. But the point is, we're not in QE. There's no QE influence. The other thing that's been played also by, we'll call the crypto guys, is that the reason why we fell is the government was shut down. This is Tom Lee's story and others that have made up more stuff around this. But somehow this illiquidity was what squeezed Bitcoin down. I wouldn't be at all surprised if it wasn't strategy or the other treasury type companies like them just dumping this stuff, trying to cover their obligations that they had. So there was a big liquidation going on. I do not think it's over yet. I do think we could rally back. I'll go through the analysis and where it stalls. But I think we're a long ways from solving the issue that's going on. I don't think it has anything to do with the Fed. Somehow the Fed now, Bitcoin evolves around Fed liquidity and different things. Maybe there's an effect. I don't think so. It's so small of a market. If you look at the liquidity of a $30+ trillion environment versus a anyway, it's just not worth talking about from the standpoint of how small Bitcoin actually is. But this is the narrative. Everybody, you talk about a crowd that are like linked up. These guys are all hooked on their arms, walking together. If somebody comes up with a story that seems like this might be legit, they jump all over it and they all walk together as a team, and you saw strategy, jump 9% because at least now everybody thinks they've got a cushion, for what, 21-month cushion. Strategy, you can see, does not work very well when Bitcoin's going down. And it's down 10% on a year. Tom Lee told us it was going to be 200,000 plus, as we sit here right now. Instead, coin's down 10%, and now he's telling us it's going to rally in, 100% in the next few months, maybe. Who knows? I'm not predicting that. I know that. But the point of this whole narrative that's going around the Fed is not valid whatsoever. The Fed's not, let's just summarize this and we'll move on. The Fed is not in QE now just because QT stopped. That's not what's going on at all. All they've done is determine they have enough money on the balance sheet to hold the economy and the banking system together. And so that they don't need to go in and buy any treasuries. They're not really doing that. If anything, just a runoff on the mortgage backs that they are holding, I believe are still in play, meaning that they are buying some, but this is not a material amount. Not like that when they, in the pandemic, when they printed $8 trillion. And, one of the funniest things I saw back on Twitter and X was this is how the Fed expands balance sheet. Open spreadsheet, add zeros, save, close spreadsheet. That's pretty much what they did. None of that is going on right now, nor is the economy in any way possible. And I'll tie together something here. Even the Christmas sales, they were going to be bad because the lower income people were going to have trouble. Well, that is what lower income people are. They have trouble. Well, always. They live in trouble. And so they're trying to make that the narrative. And meanwhile, it looks like all the sales that came out of this Black Friday and Cyber Monday and all that stuff are looking pretty darn good from that standpoint. So economy is pretty solid shape. It depends, obviously, who you are, where you are in the industry, but overall, it's in pretty good shape. So, but I wanted to clarify that, and obviously, we got the Fed next week and things of that, so I'll probably be hitting on some of these Fed narratives as we go through this week. So let's go ahead and get into the. Let me just see if I want to just see if the models have run yet, so I can go through the database. Bear with me 1 second here. Okay, looks like they're probably updated. So we'll go through our normal sequence. We'll go through the WaveTech database. We'll talk a little bit about that. I don't expect much is going on. I think that it's going to be somewhat, I think, boring as we come into the next couple of weeks. Really, we've got this week, next week, and then we're dead into the holidays coming at us really quick. This month's going to fly by like it always does. But let's go ahead and take a look at the database. I'm just double checking one thing. Yeah, it looks like we're pretty good shape. Let's go ahead and go over there. So as we look at the WaveTech database, what we're seeing here, we're up to 33%. We had 1,501 plus 87. So we're looking at basically 1,590 new buys. We got bullish on 1.2, not a lot of activity on 3.2. It moves a little slower, but we're up to 33.37. So we're up about 3% on the database, and we should continue to move toward that 42 number. So we are seeing some traction here. Let's see if there's any. Yeah, there are some. Now there's just, I thought there was a new sector. So we're sitting here with 9 sectors long right now, which is decent traction. If you don't get the Substack, go to kindlereport.substack.com and sign up. You can get a free version. I do at least 2 or 3, 1 or 2 freebies every week. It's $8 a month, so it's easy. It's pretty immaterial. if you're watching the markets, and I try to write up all the dynamics. And like I said, once we launch, I just go ahead while I'm in this mode. Is don't forget we've got basically a 50% sale on the indicators at 447, and you get a free first month of my inner circle that I'm starting in January, and that's going to be on our Discord. And you get access to the Discord. It's a private Discord as well. So make sure you sign up for that, and you'll definitely be part of that community as we build it out. And I'm actually really looking at, and those of you watching, I see a few of you that I know that are in Discord. Just I'll be reaching out, putting some announcements there. I want to interact. I'm going to do a couple live with you guys that are hanging around. So I'll let you know what day that's going to happen. I'll put a message out, and then we'll hang out in a room and just discuss some of the inner circle ideas and get some feedback from you guys. Okay, back to analysis. So anyway, we're seeing some traction here. Let's just go ahead on and let's go over here. This is something else I'm looking to do as we go forward as well is to possibly start a portfolio that you'll be able to track with me out of the Wave Tech and a portfolio expert to kind of some of my picks. And this is something new. I've been talking internally about doing this probably for 2 years, where I have a portfolio, a selection list, my chosen few stocks that will just track within the portfolio manager. And I've got some interesting things coming out as well as far as Wave Tech goes. So anyway, so here we are looking at the minis. Now we're going to see some choppiness here. We're up 10 handles right now, and we should come into these moving averages here. So I don't see a lot of upside. If we look at the algos here, you'll see PPM1 is actually showing a little bit of a choppy zone here. But as we come into Wednesday of next week, the momentum is going to bleed out. So I suspect that we're going to get a little cautious as we go through the rest of this week. We got 3 more days to go through this week. And then coming into early next week, I think all the momentum's going to flatten out. The one thing that is positive here is PPM2 is showing a little bit of acceleration coming in. The forecast where the dots are the Wave Tech indicators showing what is being predicted as far as what the momentum's going to do. And then the moving averages you're seeing the dots here. Let me just blow that up. This is what's being predicted for moving averages. So you can see everything's kind of flattening out. Makes sense year in. December's not necessarily, everybody talks about the year-end rally, but we moved off of this low. I think this was a substantial move, almost of 16% here. But this is really what we're coming into, is this choppy sideways range. I don't see any major ups or downs. We're just going to float along in this moving average pattern and probably just stay choppy. Maybe we'll get a little retracement. We go back over here as we come into, I'm just looking here, where my cursor is right now is December, that's 22nd. That's coming into Christmas week, and volume's just going to go to zero pretty much. We're going to see activity slow down. So it makes sense that the forecast right now by the algos and just seasonally, we'll call it, is going to flatten out. So we got really the rest of this week and next week, we got the Fed meeting. So that's probably going to be, for the most part, the end of the year and what we're expected to see from that standpoint. So I don't see any excitement coming. I don't know what would trigger that. Maybe the end of the Ukrainian war. Would that be a stimulus? It could be. That could be the one thing hanging out there that's uncertain. They were talking. Supposedly there were some good meetings that went on, and they were constructive, whatever that means. But overall, we're not seeing, at least in the August right now, we're seeing really the flattening out of momentum, which is pretty typical for this time of the year. So, we're really just winding things down. I will be coming into next week. I'm going to be focusing in on my annual outlook. Planning on having that out by the first of the year. So that's going to be interesting. A lot of times I'll wait to the first week. I like to see the first tick of the year. That may still be the case. I'll let you know and I'll confirm when that report's going to be up. All right, let's go ahead. And NASDAQ, all these things are going to print the same way. NASDAQ's got a little stronger mode, still got a little sideways. We had a pretty good day yesterday. It was pretty impressive. We got, as I've been telling you, the market grid numbers. I always make sure you can get them off this screen. I used to put them in the newsletter. Ultimately, when we get new technology, we have a new module coming out that will be off a website somewhere. We've built this out so you're going to be able to run these data sheets on your own. And so if you're new to the channel, let me just show you what those data sheets look like. Well, there you go. So this is what these look like. This was on Bitcoin. I'm going to look and see what I want to blow up this right here just to get a feel for what this is out of last night's sheet that was run. So it's looking like prices rising under deteriorating momentum. So we got a bit of a mixed picture here, mixed signals last night, and we ended up getting a pretty good reversal after some numbers. Right now we can see right here 89, 104, 92. I haven't run the sheets for tonight. And I did see some folks talking on Discord today that some of the setups, I run these sheets later at night. I typically try to get these out, the newsletter out around the London opening. Those of you know me, that's my primary trading time during the day, is usually hour before and hour after London open. So I usually writing the newsletter during that time. It's an interesting time at night. There's a lot of really good trade setups. Once we get this new module out that you'll be able to run things, when I tell you I'm going to do a video just on that module when we get it closer to release, and it is slated, at least as IT departments go, around 3 weeks away. We'll see if that gets out. It'll put us, right at the first of the year. But the point is, you'll be able to run these sheets, and you'll be able to run them much sooner than I do. You can run them. The best time is probably in the first hour that these markets open for the overnight session. So you could be running things there, getting trade setups out of there, because like I said, I'm going to do a video to show you exactly how these sheets work, and it's going to be, I think you folks are going to be excited about when you see what I'm doing with this. There's going to be a community effort to run a lot of sheets and searchable database, all kinds of really cool stuff. So anyway, but a lot of things to be interesting when I run these sheets tonight. Those are in the Substack every day. Usually puts out a couple trades. So it said entry if it broke out over 87,100. This was the positive trade. Break over 87,100, which it did, and then target was 89,104. Of course, we know it continued to run right into a 91 handle. So all that's good. Let's go back to the main analysis again. So NASDAQ, like I said, it's got a little more positive, but almost the same configuration. Looks like right into right into Christmas, that 21 is going to be support. So the 21-day moving average, both on the S&P and the NASDAQ, will be your key buy the dip points because you're still in buy the dip mode. And yesterday was a pretty good example of that. There was a nice run up to lows, especially on the NASDAQ. But this is going to maintain itself. But I would look for somewhere between 40 period moving average and I'll tell you what those values are. 25,207, 25,291. So right in that range is going to be a sweet spot for buying the dips if we see any over the next several days. That's going to be your point to get in there. How am I doing on time? 25 minutes. Okay, good. So this is gold. I think gold printed down pretty decent, rebounded off of its lows, but gold is not in a big rollover, but it's definitely losing momentum and it's probably going to flatten out. So while Bitcoin was declining, gold was rallying. If gold declines, we'll probably see a little push on Bitcoin. I'll talk about that in a minute. It looks like there's a decent push coming on Bitcoin here. So they're going to sell this, probably buy Bitcoin. That seems to be a thing. You could probably do a spread trade against that. So if you pair those, I think you'll see that pretty much works. But the reality is that momentum is going to be declining on gold in everything. It's interesting. Right at Christmas Day is when this stuff happens. So I don't even know. Okay, Christmas Day is on Friday, so we'll have a half a day Thursday trade and then Monday. So that's perfect. So it looks like there's a bit of a turn on everything. Seems to be lining up that way. And like I said, once again, from a viewpoint of market activity around the holidays, that makes a lot of sense from that standpoint. Not a lot to look at here, but if you have the indicators, make sure you just pay attention. You should be able to trade off S1, R1 right now with this kind of a neutral. It's not bearish, it's not super bullish. It's right there. There is an upside bias to the gold for at least another 2 days, and then we'll see maybe some pullback from there. All right, let's get to Bitcoin. So nice reversal yesterday. Let's take a look. So the low was 86,190. So definitely we broke over that 87.10 on the data sheet was the trade. And then it was projecting up to 89. And really what that was STX was 89,350 yesterday. So we exceeded that, and let me look at something, and we closed above it. So we have a bit of an RTX sell signal, meaning that we probably go sideways. And you can see that it looks like the red dot, this is, let me blow that up. This red dot is forecasting where the flow should go. So it looks like we're going to hover around this. There's still some decent pressure on the downside. PPM 2 is at a 0.50. So we should basically track the 21-day moving average. And you can see that's forecast to be flat to down. I suspect we'll get back under that a little bit. And right now that number, let me give you a number here. That number is 98.4, and let's see, 95.95 is a projected close. And then if we get down to 89.9 and then 98, so we'll call it 89,900 to 98,500 is kind of your forecast. We should come into that level, and we're also looking at the market grid is 88,908. So that's probably going to be S2 R1 92 429. Where have we been so far tonight here? Yeah, so we've already satisfied probably the upper band. Will probably come back in a little bit. But the ultimate target is going to be the 40 to 98,000. There's a potential to get above that. We'll see how the market grid sets up. If we are able to close lower tomorrow, then we're probably going to just flatten out a little bit with this. And everything, folks, is going to be centered, at least, like I said, we're coming down to, we'll call it the last real 8 trading days of the month, in my opinion. There might be a little blip there on some illiquidity as far as traders around. But for the most part, we're just going to see this market, just go sideways in all these. And like I said, the last, by next Friday, we'll be pretty much done with a high volume. Volume will start to taper off, a holiday style. Happens every year. I usually go out of town, so I'm not around this year. I'll be around for trading days. So newsletter, other than the holidays that we have coming up, will be written every day as we go through the rest of the year. So that will be there. All right. Let me look at some of your comments, and then we'll start to wind down this stream. Yeah, I did say I was going to talk about the Japanese thing. I did not prep for that, but I think markets seem to be responding as far as Japan raising rates. They seem to be able, markets have stabilized, seem to be okay. And as somebody was saying here, no more free money from Japan, borrow at zero, buy bonds for 5%. Yeah. So the carry trade is maybe start to fade here. Let me just look at it some more comments here. Yeah, so Jeff is asking, what's the delay time between money printed and felt effects? No money's being printed, so I don't know. This was my thesis of tonight's show. There's no new money being created. There is no QE happening right now. All they did was stop selling. They stopped QT. That does not immediately turn into QE. They're not printing. They're not doing anything. So, yeah, it is pretty much. I'm just looking at Jeff's got several comments here. Just looking at a couple more comments. Yeah, so Infinite said, I've had the indicators for years. The very first release of the indicators did not have the predictive indicators. There is a slight upgrade, $147, I think it is. If you want it, send me an email to info@Kendall Report. And there's some new indicators as well that go with that total suite. So, and that'll get you also into the, you will get into the new inner circle as well. Yeah, so David Ford's talking about the velocity of money. That's actually been one of the things that have kept things more in check and seen, is the velocity has been participating at a good level. So that's helped a lot. Just looking through a few more comments. Not a lot out here today. Yeah, let's see here. Yeah, so Todd saying big long time holder, Bitcoin sold at the highs. Yeah, listen, I just come back up. I It's very difficult right now. That's the beauty of the chain, right? You can't see who the seller is. I you know I think with strategy declining as much, I suspect, well, be pretty fraudulent. I've said this before that some of the things that Saylor said, some of the things that Tom Lee has said. Now I believe he's got his little ether project that he's running now. These guys are breaking, SEC laws everywhere just by spouting their mouth. But we've watched this happen in the past, even with Kathy Wood and Ark. I mean, some of the stuff that's come out of her mouth, especially you folks might probably remember back in, what was that, 22 or 3, when all the meme stocks were dying, and Kathy was predicting her fund would double, within 2 years. I mean, money managers don't do that. I mean, it's not legal to predict what you can predict individual items that you hold, but to put out to everybody that I remember when she said that, I thought, why is she, not getting hammered on fines? We won't throw her in jail for it, but I don't get it. I've been around a long time and seen things. I've worked with a lot of money managers, and it's amazing that some of the things that are coming out of these guys' mouths and the leniency or the lack of focus or whatever of the SEC is pretty amazing. Of course, for years, I'm not sure we had the SEC. Biden and the guys were pretty much against crypto. I think it was pretty obvious. Trump's the opposite. But anyway, I don't know who the seller was on Bitcoin, but it was substantial, and it was interesting that they were advertising all these buying that was going on. So I don't see a lot of comments. I don't know if anybody has put anything new up. Doesn't look like it. So we'll get out of here early tonight, like 38 minutes roughly. But I really, I think we'll see Bitcoin rally back up. Maybe push 98. If they get that close, everybody's they're going to feed off the 100 print or more. So I suspect it'll probably extend if it does get there. That's probably a good trade. We'll see. Today will be a critical day after what we've seen in the last couple of days, a Sunday night sell-off and then the rebound today. We'll have to see how that plays out. I'm looking at the chart here. Momentum looks like it's topping already on PPM1, so we'll see how it plays out. But like I said, I'm planning on doing some videos, probably try to hit tomorrow, Wednesday, and Thursday. Next week for sure the Fed, but I think I'll try to get up. I don't know if I'll be able to do Sunday night or not. So it'll probably be Monday through Thursday, something like that. And then the Substack will be up every day, so there'll be a Monday morning Substack. So a couple things for you folks to focus on is if you don't have indicators, get them. KendallReport.com/indicators24 will get you there. And then the Substack is KendallReport.substack.com. And you have all that. You should for the items that we're following right now is always the same on Substack. It's ES, the E-minis, the NASDAQ. We do gold and Bitcoin every night. And there's typically 2 trades out on every markets and the data sheets and all that. And then we'll keep these videos going and trying to get back. I want to do these, like I said, because as I come into the annual report, I want to get my legs back under me and talking about the macro and digging in again like I did before. So you folks will get the benefit of me getting my sea legs back, as they say. Anyway, thanks for participating, and I appreciate everybody that comes. Make sure you hit the like button because it does help, and we'll see you tomorrow, 8 o'clock. Sounds good. See you then.